Great and beautiful morning, afternoon, and evening to you, wherever you are joining us at this hour. I say, welcome to 240 edition of Investdata Trading Academy Live with Ambrose. Today is the last trading day of the week. I can see that the market are bursting up and down across the globe, especially in the matured market. We are seeing a mixed trend this morning, and this can tell you that in the last no 1 month, market volatility has been what on the extreme, and that tells you that market is reacting to what to information has been displayed or has been pop up from one corner or the other. And you as a trader or investor, no matter what you are trading, this information that are coming, there are different way of analyzing it, and people have different view. But you that a trader that are trading your fund, you need to look at what is the chart saying. Because that will reflect you. I will tell you what the people are doing. Are they dumping? Are they buying? It will show on their chart. That's why I said chart is your friend. Trade chart and not the news, because the news will reflect what on the chart. But we can see how these news are driving sentiment that the chart is reflected on daily basis, which we are all discussing on daily basis. Because of what we are doing live market, and that tells you what is happening as we speak now, wherever you are. Whether you are joining us from US, UK, you are trading Nigeria market, what is happening in the market is what you are seeing live. And if you are trading all those matured markets, also from here, also guiding to know exactly what to do because of what? Because of the increased volatility that at times people panic out of their position because of this volatility, and also at times also people take advantage of it to buy and what and sell at the top. So understanding the volatility is key, is very very key. And what are the factors driving those volatility? Are there things that come to stay, or things that are just temporary, that before you know it they fade out and the market will find its own direction or its own course? When you're able to have this at the back of your mind, it go a long way also to guide you. Yes, as we speak, we saw how the market across the globe closed in green after the we saw the UK inflation data there yesterday. It was announced, and also people riding on the secretary to Treasury in US, at the Congress, the testimony she gave, and all those stuff. Those pulled the sentiment in those matured market. We saw most of the market closing in green. I tell you yesterday, all the three indicators, or major indicators of US market were in green. Also, but this morning, you can see also there's already a missed trend. What we trend, most of these indicators are also missed at this hour. They are also looking missed some are in green, some are in red, just to reflect what the state of what of investors' perception as we speak now. But the good thing is that in US, this trend continue to go up and down. Most of the indicators are in green. I mean, two of them are in green. We can see only that Jones is slightly in red. Slightly in red. You can see that the S&P and the Nasdaq are in green. Good one. But as a result of what of the outcome of what the MPC meeting that was the Fed meeting, and also that we saw in UK. But generally, the outcome of these meetings where interest was high also is a kind of a prelude or an assertion that what we are seeing this day, whether the central parts of the world are becoming hawkish or they becoming a dove, we don't know what to classify them. These are also impacted on the banking situation as we speak now. Yes, there's no alarm here and there that the banking sector is shaking, and investors are trying to look at away from banks in those matured market, because banking fear has really put that index in that market down across the globe, especially the matured market where these banks are failed. You can remember them. We have seen First Republic, we have seen a signature, we have seen the Silicon Valley Bank, and also all sorts of them. Also that have sent a kind of fear that the recent or the more than almost a year rate hike, we was started in March, that this rate hike has also hitting this have hit this banking sector. But I'll tell you the larger problem or the bigger problem is the economy. As you are hiding rate, automatically you are kind of reducing economic activities, and that will lead to a recession. And that recession is the greatest fear. Banking, yes, can be corrected, because if you stop bringing your rate down, you might see it rate down. But for for the economy, it will take time for the economy to recover. But for banking sector, with the intervention we are seeing from this government and the matured economy, that might play a little way on that. You can see that the oil price that is heading for almost a 1 year low that tested $70 as we speak this week, that despite the crash we saw, it's almost recovering to record again, trading around 76.28 dollar as we speak now. They tell you that this market oscillation are the things that are driving this volatility. But one thing to note is that it is clear at this moment that that the central banks across the globe that are continuing to want to hike rate are on the path of what raising rate, and they did. As such, this they identify inflation checkmating as what as the more important than the risk, the larger economic post. I tell you that as they are all facing to fight inflation or the expense of economic activities, which as I said earlier, will point toward to recession. It tells you that interest rate hike for inflation is now becoming more important for interest rate for adjustment for what for economic growth and development. And I tell you on a larger scale, if it's not checked, and as the World Bank are also people are saying, if not checked, we might see a global recession. If it was, it would take you time for you to recover from it if the market, the global economy go into recession. As I said, the effect of higher rates on financial stability or financial sector is not as much as concern, but the recession that is knocking at the doors of many economy as we speak should be checked. As we speak now, many economy across the world they are I'll tell you that recession is already knocking at their door and they need to check it. And this is how investors should look at. And this is time for now to look at what we call how can you do what we call rotation, sectoral rotation based on what? On relative strength, using your mega trend and pattern. These are the things we want to discuss what in the coming masterclass. Because now that we're seeing that the market and the economy across the globe, even Nigeria, we're seeing a mixed number, a mixed economic data, it's the time for investors to start what we call sectoral rotation based on what? On relative strength, on what? On mega trend and patterns changing. In a changing world, global economic, where the environment is becoming unpredictable, it is now for you to apply simple trend and pattern word and pattern strategy word to stay. And that's why I said, if you remember yesterday, I said that the heartbeat of the market is for you to know the strength and what and the market cycle. Once you're able to know the direction and the trend, and able to know what to do exactly, that is where you get it at the right time and for you to work to know whether you are buying or you are selling. And for any investor to make money, you buy at the right time and sell at the right time. But when you are buying at the wrong time, you are entering at the time the market is correcting. At the peak of the market will bring down. But when you buy at the time the market is breaching out and you join at the good time, that's why I said you must understand this thing in your sectoral rotation. And that is part of what I'm going to teach in the class. So that you know exactly where to be and looking at your relative strength, not relative strength index, relative strength of these sectors, and know exactly which of the companies or which of the a stock in that sector have the strength to kind of outperform the others and also the sector index as general. Once you know all this and also outperform the market and you key into it, and I said that this momentum is what we're going to use to know where the market is going. We see that the market momentum already is a bit weak now because you can see that the money flow is already looking down below 50. It's a sign that that the market is relatively weak as we speak, waiting for a trigger. And you know that market anywhere in the world feed on what information. That is why whatever that's happening in the banking sector, with the different news of failure, is also reflecting on the market. This morning, we're seeing that as I showed told you earlier that we're seeing that the US market is in green. As we speak now, if you look at what is happening in Europe now market now, Europe market is also in the as we speak has opened lower as a concern of what of showing economic growth as the bank crisis can continue despite the intervention we're seeing because signals are coming, lights are coming that this bank issue is not yet over. On that, it's threatening some economy already. You can see that if you look at in Europe, I'll tell you that most of the markets that area now are in red. They are all looking down. It open lower this hour, and also the economic data released on Friday also contain to show that yes, there are some concerns in terms of economy. And if you are hiking rate in this domain, in this environment, you are further heating up the system. That is why remember what the Bank of England did yesterday. Once they are hiked, they said they are already putting a feet and eye where they will stop this thing because it's not going to do them good if they continue. But like I said, that the main bulk of all these government and should look at how they can address the issue of what is happening in Ukraine and Russia. I will tell you, this have changed a lot of kind of brought a distortion in flow of a lot of things, commodity, oil, everything. For that, once it's addressed, now we cannot think of the economy coming back again to find its feet. But as far as this war is going, since that last year, 2022, the whole economy has been on what on up and down movement, and that also keep volatility, on and on. Even if you look at what happened in COVID-19 era, what we are seeing today, since last year, I will tell you, is becoming something else in terms of volatility, one information, and also US and China are not helping matter because of what they are moving in different directions. There are two big major economy of the world. These are the things you need to look at. What is happening there? One is looking for dominance, one is looking at of taking charge, and because of also the power of their currency, now the petrodollar, sorry, that US are used to kind of dominate the economy, the global economy. You can see that China is indirectly coming one way to also pull out for that, align with other like Iran and others. To tell you that Russia, if that I mean like the global economy, this globalization that will depend on that trade might likely reduce, and that also has the way of affecting some economy. I think going to the future, the address this issue of Ukraine and Russia, and also instead of many mature economies spending more of energy, in piling up arms and also defense, let's then also put the same energy in driving the economy so that the whole world will also benefit from it. That is the progress now. But if you look at Asia market as we speak now, Asia market is also have taken the pattern of what we are seeing in European market. Some of the Asia market are in green. I can tell you only just few are in red. But in Russia and US, I tell you two are in green, one. Also, but in Europe, we are seeing that nearly all the indices here are in red now as we speak. They are down. It tells you how the market is also reacting to news over there. And despite the corporate earnings that are coming that are good, volatility in the global banking sector also driving investors sentiment left and right, and this is likely to continue. And if like I said, if not checked, it might bring what recession risk, and that is what is also determine where investors should look at. You see, a kind of general fundamental deterioration, or we're seeing that some sectors are taking advantage of what is happening. These are the things you should look at, and that's why I said the fixed income market is another place where we're seeing a kind of a stronger up and down movement in terms of what in terms of volatility as we speak. Yes, I believe that as oil price continue to oscillate up and down as a result of heat hike and expected reduction very soon, and also expected that the demand for China will increase despite that the outlook remain mixed. These are the things that are driving oil price as we speak now. For me, investors across the globe should not be worried, but rather invest with knowledge and also keep your eyes on your chart. Yes, if you look at African market as we speak also is also mixed that speak there. If you look at NGS, where we trade down here, that we are turning to NGS now, we are seeing that NGS open in the red as we speak. It is cycling also in the red, despite trying to recover from in kind of a pullback we saw early trading. Now it has bounced back again to remain a bit flat, trying to consolidate as we have seen so far at the beginning of the week. That consolidation is still on as we speak now. I want to go back to see what is happening on the NGS at this hour. Yes, we'll see more notification from the stocks that are listed on NGS in terms of dividend news and also approval of the 2022 audited account and dividend, and also many companies notifying of their work AGM, and also those at the management also said that their company have declared dividend for investors in that company. These are the information that are on ground now. From the updates we are seeing from the market, we are seeing that fixing healthcare, yes, with the result we've seen, good result, but the result that are there on the jet account, but we're seeing a 55 kobo dividend declared for the period ended at 2022. The other they're going to also come with another bonus to come, but for me, the dividend of 5 kobo is not too attractive for the stock at the price is selling, but that is what they're paying. If they're going to come with a bonus as they did last year, after analyzing their 50 kobo, we saw a bonus of 1 for 10. If that's going to suffice at this point, we don't know, but there is no information. Also, me and Becca have notified the market of a board meeting. Also, that of GSK have also done the same thing. And also, we're seeing also that Dangote has also notified the market of his board meeting, board of his AGM. You can see that this information are what investors are looking at this hour to see where they are going. More of results expected between now and the last trading day of 31st of March. On that note, investors are looking for what a trigger. That's why market are remain in this sideway movement, or what we call a ranging market, or side way move trending. And when the market is trending on this kind of situation, both the market operators and also the investors, the traders, the market remain worried and somehow, because market is not going up for them to say they are making profit, or pulling back for them to say they are buying into a new low price. But as we speak now, market remain on a sideway movement. And this has a lot of what from stocks according to index as what is what in the market. Now, if you look at this, the index formation, you can know that there are some few stocks that has more weight on the index. When those stocks again they keep the market unchanged, why some? That's why I said if you look at the market rate from week to date, I think that the market rate is not too attractive. We are seeing a more negative market rate, and that tells you that it tells you something that one thing that you should know as investor. When we are seeing much negative or higher negative market rate, it tells that there is something wrong in the market in terms of that sellers are dominating the market. But when you see that you are having a positive market rate on increase, then that also the buyers are dominating the market. That's why I said market has shown a sign of weakness as we speak now, which I'm going to show you the chart and we'll come to them. But as we speak now, I want to look at the market. What is market trading at this point? Market is doing 54,800 and 54,862.62. That the market is down by 61.06. The market is down by what? By 0.09% already, 0.09% already, sorry, 8 already at this hour. But we're also seeing a negative market rate of 7 stocks are down as we speak now in terms of the red one. If you look at the market, I was having okay, four stocks are in on the gainer start, or less it has been, but at this hour we're seeing 4 stocks on the gainer start, 7 losers and what are 4 gainers. If you look at the gainer start, first we have seen that the Northern Police Microfinance is leading with about 8.something%, followed by Geregu, Stanbic IBTC, the Jais Bank and Owando. Oh, these are 5. Okay, 5 stocks that speak now. Good one on the gainer start. Then if you look at the loser start, we're seeing Nigeria Brewery is leading, followed by Transport. You can see also Wapik Insurance, Eco Insurance, and Boa Cement. These are the the situation of the market as well. There's 7 losers, but see that the gainers are looking to 5. So if you look at the volume traded so far in terms of volume, I see that Fidelity as of yesterday was this morning also was seeing volume Fidelity trading around 5 naira to 1 kobo. Something is in for that stock. For see this kind of volume happening in Fidelity and also sustaining its price. This good one. Fidelity is leading at about 18, 16 points, sorry, 16.8 million shares to lead at this hour, followed by Nimet 14.01 million shares traded so far. Then NGS Group followed by 7.2 million shares. Vaccine Transport 6.2 million shares, and GT Code trading at 5 naira flat. 6 what also 6 million shares traded so far as we speak. For me, there's no cause for alarm, but as an investor, this is your market. But for those that are looking forward for you to buy low, you still also have to wait to see a pullback. Yes, markets are trending already in a distribution phase. Then when market enter a decline phase, that's where wait for what to see a strong support level and start buying. For traders, don't need to panic. For those that are in profit in most of their position, nothing stopping taking your profit. For those that are investors, take advantage of the dividend expected, and those that have declared dividend, buy your position and accumulate for you to earn more dividend. But for traders, still wait your position. But I see that there's still opportunity for us to enter the market. So let's see where the market will go back to before we can start jumping in. Yes, we want to quickly come back to our chart. It's very, very key for us at this point. If you look at the market this hour, I quickly want to draw this chart again today, so that something has changed in this market, so that we can look at it and see what is that have changed and what are we going to do, because nothing has changed. Market has been on a consolidation move since it touched at this level. Touched at this level. Then then we saw the market at this level. Uh, this point. This point. See, this was where the market was trending, consolidation at this point before a major breakdown. That breakdown in the market pullback on profit taking, I saw it, a market start coming down. And when it came to this level, market started trending since it broke down the 55,000 and come to 54. Then you can see market has trended at this level. This is the current trend, and it's also called the consolidation trend, or call it as a trend, anything you want to call it at this point, because at this range between here and here, that is where the market is now. You can see it here. Then another strong support level is at this level where my cursor is now. But from today, what is happening? Let me bring something before I call indicators, but let's just explain some things that are very important here so that you understand what you're saying. You can see this is the market, you can see where the market is now. You can see that market today, this is sign that market has pulled back already to this level before coming up here again. It's a good one that market try to resist this line, but it give you a signal that market is looking for information. If this information come and it didn't beat market expectation, you see this market pulling back here. That's why I said those that are traders, that the market should not worry. And that's why we are preparing for the coming master class, so that when the market pull back again, like I tell you that during the time of uncertainties, when the market pull back at this point, ahead of the incoming government, we know where they are heading to, we are discussing that day, we'll now start picking stocks, and those that will give us opportunity. That's why for those that have registered for the master class, I say kudos to you, and also don't just anything that will distract you that day, put it away. That when you come, you know that you are there to work, to learn at the same time, take position ahead of others for the expected there. Because if you are waiting to buy after the inauguration and all those stuff, that means you are going to wait around June, August, then other people have already becoming market price are starting. But now I expect a pullback between now and before start seeing a Q1 number, or you have to look at good sectors that have the potential to drive earnings that go into the future. How to position in them? That is what we are going to discuss in that class. Because as I was saying, you can see that here a market has been on a consolidation mode here. You can see what I'm saying. If you are looking at this chart from here down here, if you are taking from here to comport, so that there was a pullback or a pull down or a pullback here, let me call it down to this point before coming up. Tell me that it's a sign that if all things are not being equal, if all things if all things not equal, or the numbers we're expecting go below expectation, or the payouts, as we are seeing gradually now that the payouts we are seeing from most of these companies are not too attractive. But the good thing is that if most of them can retain what they paid last year at this current price, fine. But anything lower than what they paid last time will not support the market, uptrend we're expecting. But I believe that all eyes on this number, and the focus are gradually shifting away from election, also shifting away from last MPC meeting. Overall, now focus on what, on numbers, and what, and the policy, or the cabinet of incoming the government, and how they're going to take for the kind of pattern they're going to take, which I know that most of investors have seen the manifesto of this government that's coming, because we saw the four manifesto, but now that we're seeing the winner, and what they are saying going to do is going to also start implementing them. That will also guide you where will the market be heading to. You can see now what we are seeing. Market is relatively weak as we speak now, but this weakness is what creates opportunity. When markets are trending like this, both the traders, investors, and even market operators are not happy, because nothing is happening at this point. But there's no movement, or there's no movement now. Now that we're seeing a pullback here, that will create opportunity for the sign investors and smart traders also to know what to do at this hour. Yes, quick one. Now call our indicators to look at some things that are new in this discussion, because that momentum we are talking, we're going to look at it, the timing, also look at the candlestick pattern, like what I just showed now. The pattern I just showed that said that the S market try to resist this decline. That is what the sign of that. And when you see a market that is going down, formally say a hammer candle, it shows that sign of rebound or inflation. But we need to keep our finger crossed at this point to see what it look like. Let's call our T line. That I don't joke with it. And also, I believe that those in this class also know how to use the team line to their own advantage and to help them make your analysis that will support their decision. So I've come with this ADS again. But before we go to this chart, I want to quickly call out one chart for us to look at. Yes, you can see this is what I call this chart here we're looking at is called the cycle indicator. You can see that it tells us what is happening in the market. You don't need to to feel yourself when you're looking at the market. It gives you information. The black line here, as we speak, is the T line, and this is at this is the end of the day. While the one was before is live chart. You can see that end of the day. Look at where the index actually remain above the T line, and what is this the cycle indicator telling us? As I said, strength momentum was high. This is the momentum indicator I always call or use. That's it. Even when market here, I try to pull back here, there's a sign that it came down, but it didn't pass the 50 point of this line. But also when it came around here, it bounced back also. But when the market came down below the T line here, you can see it showed the sign that it came down, but also it rebounded also at the market, because why was it T line to tell you exactly is it time for you to panic? But when it came down, next day you panic to panic, and your trend is your momentum telling that there is still momentum. But you can see that even when the market came back here to this level, you saw it what is happening here, and market is going to do side trading at this point. It came down, momentum also came down. It peaked again, but from here to here, you saw that momentum also came down seriously at this level. It is not that it's peaking again. Like I said, the sign that we saw this morning on that candlestick, black candlestick, is a sign that yes, you will see a kind of an uptrend. So that is a candlestick. You need to understand the candlestick formation. That candlestick formation is called a hammer. And hammer, in a downtrend market or in a market that is trending, it's a sign that buyers are trying to take charge of the market. You saw how the market let's go back, but came back up again. Say that sellers were pulling down, but buyers pulled that back. It tells you at the end of the day, we will now know how the week look like, how the next week look like, because today is the last day of this week, and we expect to see more company releasing their number going into the new week, because we expect that will be the last for the official deadline, except those that have one reason or the other. But for those that have not notified for any reason, that is the week they are supposed to read the result, and that will change the face of the market. This is what I wanted to show you, and that's why you can see that already we are seeing a build up, from even yesterday the market slowed down. We saw that we are seeing momentum trying to go up. If that at the end of the day today we see higher, we will know, and that is why on the live class tomorrow, question and answer, we're also going to discuss more on what is happening in the market. For those that are taking position and there are people that have not moved in favor of them, what you should do. And those companies, what that attracted you, those that make that company solid, are they staying in that company? We'll discuss all those things tomorrow, that you know why you are stopped and the stock have not moved. If you panic, no. Or have you waited for too long? We'll tell you what to do the next from that class, because that is what we have interactive class that you can ask questions, bring out your stock and watch. That's why most of you that are not in premium class, make time to migrate to it, so that we discuss more where you can even ask questions. Other people in the class can also contribute to kind of give you more confidence and also strengthen, make your direction or the perspective you are having, make it clearer to guide you. This is for that. Let's go back to our live class. I want to very quickly just show you that I said relatively weak. You can also see that here, we saw that yesterday, we saw the money floating number now is down but flat as we speak now. And even you can see that this morning the red has come up. That's also another sign of weakness. When the market pull back here, you can see that the blue is looking down while the red has come up already. You can see this tiny thing here, because these are what I want to show us so that we always see it. can see that there's a the red across the blue one now. You can see it now. And this at the point you can see what is happening here. That will get it. Even though it's relatively flat for money flow, you can see what is happening in terms of for ADS. Because ADS is also very, very good when we are looking at what momentum behind what. So like I told you that the momentum is relatively weak. Try to look up. That is what ADS has also confirmed. And it's why that all eyes are see what are the factors that will change the market trend. But for, like I said, for those that are income investor, don't need to panic. Just hold your position and also take care, and watch the trend. Like what we're saying now that they want to look at the gainers as we speak now, 2 or 3 gainers of you can see Stanbic results came to the market and also the market didn't react to Stanbic results as such. But let's see what we're saying in green now. Let's see the momentum we're seeing in that stock. Let's see if it's what we can look at and see where it's going from here now. You can see this a day chart for the stock. Yes, despite that it pulled back, test the T line. You can see that it's still around the, the stock still around that, 38, 38, 50 now to watch. And the good thing that money flow is looking up around 80. That is a good sign for the stock. We're also saying that the blue line is also gradually coming up. Once it cross here, momentum will change. But I believe that this stock has momentum. But the volume we're seeing here now so relatively high. It's above the T line, above the black line down here. Let's see, I think above the T line. For me, there's no cause for this stock. Let's look at the 1 hour chart for the stock. For 1 hour chart, you can notice what I'm saying. No one can see that the blue candlestick, which is a bullish candle, is also trying almost taking cover the last 1 hour. I can see these are 1 hour charts. You can see the candlestick is almost covering. Once able to cover it, that will be good. And money flows try to come up around 25, and see, the ADS for me is still weak a bit. It's below 20, around 13 on the 1 hour chart. Then the last chart before we quickly go, let's look at what happened in access. What is happening in access? So that access led the one that put the bucket back down yesterday. Let's see if the momentum has changed. There's anything. Let's look at it and we know if the momentum has changed. We know exactly for access now. Access bank on the 1 hour chart was saying that money flow is becoming looking attractive, looking up sharply. You can see it here. And it now tested the T line, was flat under the T line. I tested it, but look at where the green is now. Around the 89 now, around the 880. You can see now. Let's keep our finger on this back. Then let's go to the day chart to see what is happening in the stock. Yes, slightly below the T line, we can see that it's between 880 and 884. That's where it's happening. And on the daily chart, money flow is down totally around 20. You can see it here. Now you can see that different there's a kind of moving in opposite direction, divergence between the red and black. They are not even looking up to come together. That also what access. For those that are long term for access, there's no cost for that. But for traders, let's wait for a breakout from the T line before we can take position again if you are not there. So for an access for long term or for medium or for profit or for dividend, hold your position. For traders that want to enter access, want to confirm a breakout for this level before we can jump into access. For me, there's no cost for alarm in the market, but rather let's watch our strategies and know when to take action. And also, if you are in cash, pull your cash and watch when to start buying again. On this note, I'll say thank you and enjoy the rest of your trading day. See you on Monday, hopefully by God's grace. I see those in the premium class on Saturday, where we'll be discussing more ahead of our master class in that class. See you. Bye-bye.